This is Steve Wolf today with Greg Carroll and our weekly monitor of what's going on in the world here, WWM Talks. And interesting goings on with the market. We see a pullback, and mainly it's probably because of tech stocks. Not probably, I think it is because people are kind of rotating away from tech stocks. That doesn't mean they're selling everything they have. It just means that they're taking some profits.
Yeah, I think it was kind of interesting this morning because the market was down again, but and things kind of rebounded pretty sharply after about an hour of trading. I just saw this big spike, and I think the market's trading on some technicals. There's still a lot of money ready to step in as soon as the market's down about 5 to 7%. Boom, they come in. Semiconductors hit like a 100-day moving average. The S&P was like at their 50-day or something. So I think there's just a lot of technical trading still.
Well, you can't really blame anybody for taking a profit. I mean, something like NVIDIA, which is up, 3,000% over the last 5 years, and some of these other stocks, you can't blame people for saying, "Hey, I want to take some money off the table."
Right. Yeah. You've got to re-diversify a little bit. It's you want to hold on to those things, but when you're hitting some percentages like 15, 20, 25, 30% of your portfolio,
right, the
wise thing to do is take some off. Stocks just don't accelerate or keep ascending at that rate.
Right. And we don't like to necessarily talk about individual stocks, and again, talk to your advisor about those types of things.
Right.
But when you look at the ones that have been leading the way, I mean, they've gone up a lot, and unfortunately or fortunately, I guess, in a portfolio of stocks, if that's what you have, when one stock becomes so outsized, then you're taking a bigger risk. So especially if you're older, if you're in your 50s, 60s, 70s or up, you don't have as much time as if you're in your 20s or 30s. So those 20 and 30-year-olds say, "Hey, I don't care, I'll just hold it forever." But I think when you get especially 60, 70-year-old and you don't know how much time you have left on this earth, that becomes a different situation.
You have a different perspective, yeah. I'm starting to hear, a lot of questions about the election, of course. A very, very unique political season coming upon us with the incumbent stepping down and the vice president stepping up. I think we're going to see a lot of choppiness as, information kind of ebbs and flows, and whether the vice president is gaining traction or not. It'll be very interesting, I believe, after that first debate.
Yeah, history shows though that no matter who's the president, the markets have done okay. They've done well over Republicans, over Democrats. The Democrats will say, "Yeah, they've done better when we've been in office," and the Republicans will say, "Well, no, that's because what we did, the effects happened later." So everyone wants to take credit for the up, but nothing for the down. I think these are short term.
Yeah, that's what I mean. It's just going to be a little bumpy between now and November. But I've looked at so many different statistics on Republican, Democrat, the returns, and you're right. They're all really actually quite good, but it's amazing how different, the timelines they look, when they were elected or when they were inaugurated. It's really kind of funny the way they play with those.
But I love politicians because when things happen on their watch and it's good, they take full credit. When it doesn't happen and on their watch, they say, "Well, it was the other guy's fault."
Yeah.
So, the other gal's fault. I mean, here we have another woman running for president. An interesting way that we think. She's not the nominee yet. Kamala Harris is not yet the nominee. It looks like they're coalescing around her. But it's still possible that someone else could be the nominee.
But, to get a campaign up and running and complete it in 100 days or less, I think that'd be pretty hard. And she already has a nice war chest because she apparently gets all the Biden-Harris money to run the campaign, where someone else is going to start from ground zero. I think it would be a big mistake for the Democrats if someone actually thought they could, do better than her.
Well, I don't know.
So when does she pick her partner?
Probably sometime between now and the convention, which is in about 2-3 weeks, something like that.
Yeah. Yep.
There's not much time left until the election. But again, I think these are short-term moves. I don't think they're long-term moves. The interesting thing about businesses is that they have the ability to adapt to whatever the policies are. I do personally think there's some policies that are more conducive to business than others, and that's my opinion. But from the standpoint of a company, you've got to adapt. You have no choice.
What do you think about, these politicians, they put out these crazy ideas. I say crazy because I think they're pretty extreme usually, and so, our country is already divided. And I think when they say crazy things like they want to make everything very, give away all kinds of money or, cut taxes or raise taxes to these extreme numbers. And at the end of the day, it's got to go through Congress. And everything is so watered down. But I think these politicians really, keep stoking that fire of the divisiveness that we're seeing in this country. Yeah, do you feel that way?
Yeah, I think it's funny that everyone talks about unity, and then the next sentence is that they hate the other side. So, we'll get through this. Eventually things will work themselves out. I'm not going to spend too much time worrying about who's going to be, elected, not elected. I'm more concerned with what's happening with earnings. And interestingly, I always look at the CNN Fear and Greed Index, and it is tilting more toward the fear side now. It's just above fear. Wow. Right now it's in the neutral zone at 45, and I think it gets to about 44 or 43. It gets into the fear zone. And excuse me, you can tell that people are a little bit nervous because of elections and all that stuff, which is really the wrong thing to be nervous about.
Exactly. Earnings are what drives stock prices.
Correct. And although there's right now a pullback from technology stocks, look, AI is just in the very beginning. As someone I read said, it will never be worse than it is right now. And it's pretty good. I get on ChatGPT and ask questions it's way better than going on Google or something to try to find an answer. ChatGPT now, I will say this, that I've been on a couple of different ones, and it's interesting because it's garbage in, garbage out. Depending on the slant that they put into the, I guess the materials that the ChatGPT and those absorb in order to give you the answer, it'll come out that way.
Right.
So you go to say ask the same questions to two different AI, I don't know what they're called, robots, whatever they are, and you get a slightly different slant.
Yes. Yeah, if you use the the free version, which is the data only goes up to a couple of years ago, and then if you pay for the real version or the current version, you get a whole different story because it just has more information. So right. It's garbage in, garbage out.
Right. So
the most recent data.
With all this AI, especially when it comes to asking for information that you want to know, you have to know who the people are who've been feeding it the information. And it's terrible to say that, but that's what happens, But having said all that, AI is still in the very beginning stages. I think every business around has to use AI, or they're going to be left behind. So when you see these companies, the chip companies, the software companies, whatever that are producing or servicing or whatever AI, I think that this is probably a 5 to 10 year move. So having said that, if we see this big drop in these AI stocks, if there is a big drop, you might consider that a buying opportunity.
Yeah. I mean, you wouldn't consider what we've seen here in the last week or two as a big drop.
No,
I'm assuming.
No.
Yeah.
As we talk about drops in the market itself. People are always surprised when we say this, but usually each year you'll have one or two times when the market drops by 10, 15, even 20% during the year. And of course, that's when everybody gets all crazy. And that's why I think that's why the fear has kind of crept in, not only from the political standpoint, but when they see their portfolios all of a sudden slipping, they, oh my God, I'm going to lose everything I own. Of course, that never happens, or I won't say it never happens, but it shouldn't happen.
Yeah, and you get more fearful too when your assets are going down, prices are going up. You start holding back, and I think that's what we're seeing in the economy right now is consumer spending is down again, and that's not going to bode well for the end of the year.
Right. It's funny that we've been waiting for the Fed to lower rates. And we've been talking about that for quite a while. They're supposed to, have already lowered them by 3 or 4 times by now. And here we are in July. Maybe we get the first one in September. But everyone's waiting for that and saying, boy, we can't wait for that to happen because that's going to be great for the market. Then the other side is, well, wait a minute, why are we lowering rates? It's because everything's slowing down.
Yes.
So people are saying, well, should we invest because everything's slowing down? It's an interesting dichotomy.
And I've read some stats on that too, that where after the first rate cut, the market actually does go down. It doesn't go up, even though we've been waiting for it all year, and we're supposed to do 6 or 7 cuts from the consensus coming into 24, and now we're down to maybe 1 or 2. But historically, that first rate cut, the market sells off.
Well, and in general,
to some extent.
Well, in general, rate cuts are good for the smaller businesses. Some of these regional banks who can get some.
They'll like it.
Yeah, and quite honestly, it's good for the government, because if they can get that their debt at down to a lower rate, we're better off. As a matter of fact, I was very surprised that they didn't convert much of the debt a couple of years ago to as low as possible.
Yes, they should have been issuing 100-year bonds
exactly.
like 3%. I mean,
exactly.
Why wouldn't you do that?
Well,
why didn't they is the question, I guess. Because we spend over $1 trillion a year on servicing the debt, just the interest. Yeah. That's more than we spend on defense.
Yeah,
that's a problem. That somebody in Washington actually has to, put their big boy pants on and actually address at some point.
It's a huge problem. I've been talking about this now on this broadcast or podcast for a long time. That the amount of spending that we're doing is a bigger threat to our country than just about anything.
Absolutely.
And yet we keep spending more and more because politicians are what politicians are. They say, hey, I'm going to do something for you. Well, it's going to cost money. That's okay. I'm going to get votes.
Yep.
And that's really a problem. I don't know who's got the guts to get up there and say we need to cut, because most of the stuff that's in government spending is automatic.
Entitlements.
Well, entitlements
Defense,
are automatic, but
interest payments.
So much of it is automatic that I feel like they have very little control over those things that they can actually cut. So somewhere along the line, we have to change course. I don't know when what's going to hit the fan, but it's going to hit it at some point, whether it's 5 years, 10 years, or 30 years, I don't know, but at some point it will.
Maybe we're kind of getting a little bit of a younger generation coming into, fighting for the White House right now outside of Trump. Maybe they've got a little different perspective at some point, and we'll actually address that.
Well,
Fingers crossed.
Yeah, we can only hope. The Social Security is actually an easier one to fix than Medicare, for instance. If those are two of the things that you have to look at.
Well, what do you mean by easy?
Well, because life expectancies.
Yes.
Okay, life expectancies are pretty well known. So you can either raise,
and they're going up.
Well, they've gone up to a point, but they're not going up a lot faster than they did in the past. Right. I mean, 100 years ago, if you lived to be 45, that was old.
Right.
In 1935, when we made 65 the retirement age, that was old.
Yeah.
Today, it's more like 85.
Right.
Okay, I don't know exactly what the 80 to 85 years old.
Male female difference.
Right.
Yeah.
But it's not growing exponentially. At this point. So, but even if it is, you still know basically what the life expectancy is. So you can always say, well, we're not going to give you Social Security until a later date. That's one way. Right. Another way is to charge more in taxes, to everybody. That's another way. So, I mean, that's an easy fix.
Well, it's easier said than done, I guess.
I'm not saying that getting it passed is easy. I'm just saying the solution is easy. Whether people will do it or not and that's what we're talking about. Yeah. Who has the guts to do it?
Right.
Now, Medicare is much harder because I don't think that people really can predict, at least not yet. Maybe with AI we will. Who's going to get sick? Who's not going to get sick? What that's going to cost. It's a different program. And then there's defense. A lot of people don't want to put money in defense. There's all sorts of things that are out there that someone is going to have to say we must cut spending.
Right.
Whether they do or not, who knows?
Well, you would you would think somebody towards the end of their political career could have the more, be more brave about that. But
well, you're right, because if you're younger, you're going to be
you want to be around a long time. Yeah.
Well, you're going to be ostracized. Oh, yeah. You mean you want to do something to Social Security or Medicare or defense or whatever it is, and then you don't get reelected.
Right.
It's
someone in their 80s should, make the call. One of them stepped down. We got another guy, pushing 80, but
right. Well, Biden could have done it. Maybe Trump will do it. I don't know, but
I doubt it.
But I doubt it too. So, at any rate, a lot of interesting things happening right now in the marketplace. I think that interest rates probably will come down over the next, over the next several months. And that's another thing too. We talk about people who are on fixed income. People are buying a lot of short-term, 3-month, 6-month, 1-year treasuries or CDs because they're getting a higher rate than longer. But if interest rates start coming down and all of a sudden those, near-term rates are now at 3 and 2% or whatever, I think you're better off locking in a little bit longer, or certainly having maybe a longer portfolio. In other words, you have
extend your duration out a little bit, because correct. I think once those short-term rates start falling, they could fall fairly quickly.
Right. That's why we kind of like a laddered portfolio of bonds, where you have a 1, 2, 3, 4, 5, maybe up to 10-year portfolio. When that first one comes due, you take out a 10-year. And I think that ultimately is going to be good for people, but it hasn't been over the last couple of years, which is an anomaly.
Absolutely. Well, we were at zero interest rates for so long. I mean, the last 10, 12 years, it's been really low. So, which was not good for retirees trying to live on a fixed income.
No.
You just couldn't earn the interest. I mean, when I started in the business back in the late 90s, or mid 90s, we were getting 7 and 8% government bonds.
Well, okay.
That was easy.
I'm going to one up you on that. When I started in the business, which was the 80s, you could get bonds for 15%. I remember my dad
didn't buy enough, did you?
Well, I remember my dad, who was getting municipal bonds, wanted to go long on, and I think he was getting somewhere municipal bonds now, tax-free, about 15 or 16%. And his advisor said no, not to do that. I think he fired his advisor after that.
Yeah.
But those were, and matter of fact, my first mortgage was somewhere in the area, and I can't remember the exact amount, but it was around 12%. I think it was 12.25%. And I remember before the days of the internet, I had a book, a little paperback book on interest rates. Okay, and it gave the tables of all of them, and it went from 15 down to 8.
Oh wow.
Okay, so
didn't go lower.
It didn't go lower than that. And no one ever thought that we would be at 2%, let alone where we are now. Back then, if you had gotten a 6% mortgage, that was jackpot.
Yeah. I remember an early mortgage I had was, like high 5s or something. I'm like, wow, I'm below 6. That's really good. Right. Now I'm below 3.
Well, that's exactly. And a lot of people did that. A lot of people, before I sold my house, I had a 2.375 mortgage.
Yeah.
That was the only reason I didn't want to sell the house, but it was time.
Yeah.
So that's where we are. So interest rates coming down will be another story, and that's going to happen, I think, over the next few months. The presidential election obviously is going to be a story, as well as all the other people who are being elected. The tech stocks, the AI. So we've got a lot to look forward to.
It's going to be a busy second half of the year.
I think it will be. So anyway, that's what's going on. And by the way, in case you're wondering where our partners are, everyone's taking vacations except Greg and I.
So we're holding down the fort for the team.
Exactly. Anyway, we'll see you next week. And that's about it for this week. Take care.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only, and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.